Thanks for choosing us. Tonight, Ghana should, before the end of this year, have its first domestic credit rating agency established. This is what Joy Business has picked up from persons putting in place the structures for this agency to fully take off. My colleague George Riafe has more in this report.
Based on the documents seen by Joy Business, the Domestic Credit Rating Agency has already been registered under the name Credit Rating Agency Ghana Limited. The Ghana Stock Exchange has signed up for 50% shares in this company. The National Insurance Commission will have 25%, and the National Pensions Regulatory Authority will take up the remaining 25%. It has already secured a provisional license from the Securities and Exchange Commission as it works to get the full license. From the document, the World Bank is also supporting the recruitment of a technical advisory firm to help with the full takeoff of this company. It is the expectation of government that the establishment of this agency will aid in the issuance of more domestic debt instruments and promote an alternative source of funding for companies to raise capital. The domestic agency will also allow for independent valuation of the creditworthiness of various corporate papers that are issued and give investors more options to view companies that want to raise funds as well as go public.
Joining me on Zoom now is Associate Professor of Andrews University, Professor Williams Pepper. Thank you so much, sir, for your time here. So it appears government is moving forward with plans to establish a domestic credit ratings agency, and the latest report indicates we could have it before the end of the year. What's your reaction to this latest news?
Good evening, Beryl, and thank you for calling me. So this particular issue is coming at the back that we've noticed that investors are now aware of the risks in holding any kind of security or financial instrument in Ghana, with what happened to bondholders where they experience haircuts. So generally, the confidence level in Ghana for investors to partake in any kind of fixed security investment or stock exchange investment has gone down. And one way to assure them that where they are going to place their money is a little bit secure is to have this kind of rating agency set in place. The essence of the rating agency will be to assure investors of the credit worthiness, or let me put it in the simple terms, whether the company or the institution issuing the instrument will have the ability to pay any kind of investment or funds they raise outside when it's time for them to pay, or in a nutshell, whether these entities will not default. The rating agencies will do these assessments, and they will be able to give investors that confidence that when you're able to buy into any kind of securities, either issued by government or private entity, you'll be able to tell its level of risk or exposure, and then based on that, you'll be able to determine the expected returns that you are supposed to envisage from it.
All right. Per your understanding, how would this domestic credit rating agency work?
So my understanding is that as you mentioned, the formation of this credit agency is going to be owned by government. We may have a challenge of partiality and independence. Outside Ghana, most of these credit agencies are owned by private entities and they are for profit. But the way we have structured ours in Ghana is look at all the entities who are shareholders are government owned. And the question will be that if government is going to issue a security, will they be fair to be able to give the proper analysis and ratings that are required, where there will be no pressure coming from government to give a certain kind of ratings that will not be, in support of what government envisage. So that is where the challenge is going to come out from. And then also whether Ghanaian investors are ready to pay for credit agent ratings output. So the way credit agencies generate their revenue is that they generate their revenue when they sell these published results. So will the investors in Ghana be prepared to pay for it, or is it going to be the ratings are going to be reported in the dailies for free? So these are the challenges that probably I foresee is being coming. And then the third point is, will they be able to ascertain the needed documents from all entities? We know that in Ghana, most of the companies sometimes are not able to disclose well their financial statements. That challenge is going to come up when they start to do their work. Are they able to get the proper documentation to do the proper evaluations, to do the assessment? So these are the three main challenges. And let me add a fourth one, I think, which not be a major challenge because the micro indicators are normally given by the Ghana Statistical Service. And now, I mean, we can rely on that particular data. So these are the challenges I envisage that if we're able to overcome them, our local rating agencies will be able to do well.
But how do you think we can overcome them, Prof?
Well, as I mentioned, government will have to not be able to, so the way that the entities are structured. So, Security and Exchange Commission is owned by government. Pension Authority is owned by government. National Insurance Commission is owned by government. So, are they going to do an evaluation on government securities? If yes, then that is not going to, they are not going to be able to be fair and give proper objectives. Maybe they'll be only working for private entities, if that is the aim. In that case, they'll be able to do that. Unless when it comes to government instruments, we may need a private entity who is not who will be independent and will be able to give proper evaluation of government securities for us to be able to know the ratings being given out.
Right. Now, we know the president has called out several times what he says is the reckless behavior of credit rating agencies. How is a domestic credit rating agency going to change our economic fortunes?
Okay. So unless the domestic credit agency ratings are able to prove to the international community that their model for evaluating the credit risks of government securities are top-notch. And then that credit rating agencies must also stand a test of time with their evaluations. So it will take a very long time for a domestic credit agency to become recognized by international bodies. And always the issue of partiality will come up, as I've mentioned, because of the structure of ownership. This is an entity owned by the government of Ghana. So if he's doing his own self-evaluation to report it to the international world, they are going to say that, investors are going to say that this is not a fair representation of the situation. They will still rely on an independent evaluator to do the credit assessment of government securities.
Right, Prof, before I let you go, we're also monitoring developments on the money market as interest rates continue to rise, signaling an increase in the cost of domestic debt, although the bills were oversubscribed. Is this anything we should be worried about?
So at the moment, the only safe, let me put it, relatively low risk investment in Ghana is a Treasury bill. So investors, that is the only last resort that they have. They don't trust putting their money in government long-term securities. So that is why we have seen that part also, going up. The rate is going up because of the issue of inflation rate. Inflation rate is 43% plus, is very high. And normally, it must be commensurate to what the Treasury bill rate is. In the normal terms, the Treasury bill rate should have been more than the inflation rate. It is Ghana that is where we have seen that this is not true. So if we really even want to compute the real risk-free rate to investors are even losing money when they give their money to Treasury bill rate. But that is the only option, if you ask me, safe available options to money market investors now. So that's why we've seen that kind of demand. And then also, we noticed that the Bank of Ghana is also doing the mopping up of excess funds in the system. So another way is that you see the rates going up, and this is the ripple effect. And so until we're able to find a way to reduce the inflation rate, well, then we will also see that the Treasury bill rate will also drop. But as it stands now, this is how things are going to be, and it will be like this until the economy stabilizes, and that there's that kind of certainty within the financial industry.
Thank you so much for your time here, Professor Williams Pepper. He's the Associate Professor of Finance at Andrews University in the US. But still on Treasury Bills, joining me on Zoom now is Patrick Edemagama, Head of Trading at Republic Securities. Patrick, an update on how the Treasury Bills auction went last Friday.
Okay, good evening. On the money market, the government was able to raise about 3.53 billion against a target of 3.064 billion and recorded about 15% oversubscription. Again, the 91-day was the most desired, taking about 75% of the auction. We noticed that the 182-day followed closely, taking about 18% against a 7% for the 364-day bill. But however, we saw that the jump in the interest rates was led by the 364-day bill that closed about 41.78 basis points above the previous one to clear at 31.66%. It was followed by the 91-day that jumped about 33.83 basis points to close at 27.36. And then the 182-day jumped by 9.57 basis points to clear at 28.71%.
Right. And on the stock market, prices of Societe Generale, Standard Chartered Bank, and Fan Milk Limited are expected to rise due to market demand. What's the latest on the stock market?
Well, from last week, we saw 6 gainers taking the lead, but their gain was not able to withstand the pressure from the 3 losers. MTN was the biggest loser last week. For Societe and the others, yes, there's been significant demand on the market for them, but this demand is not being met by the supply side. So the demand keeps mounting, and whenever that happens, we expect the prices to rise. For today's market, we saw Cal Bank dropping a peso to close at 60 pesos per share, and then Farm Milk jumped by 12 pesos to close at 1 CD 50 pesos per share.
Right. So anything else to look out for in the financial market this week?
Yes, the government is targeting raising about 2.6 billion to finance short-term maturities, about 2.4 billion. So we expect the auction to be oversubscribed as well this Friday.
Right. Thank you so much, Patrick Edemagama, giving us details on Treasury Bills market for last week. We'll take a quick break here on Business Live. We'll be back with more. Please stay with us. Welcome back. This is still Business Live with me, Beverly Broom. We take a look at the rest of our stories now. Economist Professor Charles Aka has called for a review of the property tax regime to make it more targeted and efficient. According to him, the current system is not good enough to bring in the projected revenue captured in the 2023 budget. Speaking to Joy Business, Professor Aka said government could get more funds if it focuses on property tax in first-class residential areas across the country.
We employ people, and the same thing happens at the assembly. We have MMDAs, district chief executives. They're supposed to raise revenue from property taxes, from rates.
They're looking at raising some 165 million
from
property taxes.
Yeah, but if you do an analysis, and I did some analysis, if you do property taxes, for example, my own analysis I did 167 million.
Yes.
Okay. Just according to the Ghana
165 million.
Million.
Yes.
Okay. So look at that. According to the Ghana population census, there are about 8.5 million plus completed residential structures in Ghana. 1.7 million of those structures are in Greater Accra. So Accra alone has about 1.7 million structures. Now, if you do the analysis, what the government is saying is that even if you decide that all this 167 million is going to be raised from Accra alone, forget about Kumasi, Takrady, and the rest of the economy, divide the 167 million by the structures in Accra, you get each property is going to pay just about 97 Ghana cedi a year. So which means that this is quite low. Just Accra alone, if you decided to raise just about 0.25% on the properties in Accra, you will be raising about 11 billion Ghana cedi by my analysis. Just to even focus on East Legon Airport Residential, wetlands, and here, and look at all the real estate. When I was coming, people were advertising real estate. They are quoting them in dollars. Okay, so you can buy a property in East Legon for $200,000, 1 million Ghana cedis. And if people are not asked to pay property rate, then you set a target of 167 million. When you are supposed to raise, you could raise as much as 12 billion from property tax alone, from Accra alone, by my analysis. So property tax actually holds a huge potential if we were just even picking Accra, Kumasi, Takrady to start with. If we cannot even roll out the whole country and say, okay, let's focus on Greater Accra, Kumasi, Metropolis, and Western Region, Accra, Secondary Takrady, and let's value the properties that are in Greater Accra. If you even need for just Accra, East Legon, Airport Residential, Osu alone, the properties there, and value them and say that we are going to impose a tax of 0.5% or 0.1% or 0.05% on the values, you will not be talking about 167 million Ghana cedi in a year.
Now, the Association of Young Insurance Professionals Ghana has indicated that it will work with other industry players to create more awareness. This, the association says, will aid in expanding coverage. Country Director Lawrence Daniel says the association will enhance the image of insurance in Ghana through partnerships. He spoke to Joy Business.
As a young body, we'll be partnering this kind of bodies already in the system. We'll partner NIC in their advocacy. We'll partner GIA. We even partner IBAC and CELAC. You know, there's already something going on in the country for advocacy, at least to correct this kind of past the wrong stickers people use and stuff. So as we partner them, we'll be able to impact them more, especially with the youth. Because if the youth understand it more, I mean, this kind of errors won't be encouraged. So our focus, as I mentioned, is the youth. So as we partner with the NIC and the GIA, I believe these errors won't be in existence.
And finally, a former Commissioner of Insurance.
We turn our attentions to agriculture now, and some stakeholders in the agricultural sector have called on the government to develop holistic policies which will tackle the development of agriculture to avert food crisis in the future. According to them, the government would have to put measures in place to ensure a functioning value chain, leveraging on technology to boost yields. This, they believe, will solve issues of food shortage and avert food insecurity crisis. Here's more in this report.
With food crisis becoming a global security issue and the current political unrest in the ECOWAS sub-region, Ghana is likely to face a continuous shortage of food commodities such as onions and tomatoes. With food inflation hovering around 54% and the country's continuous dependence on imports, many have questioned government's policy on the sector. Dr. Kwejo Kusi Amwa is an agronomist and lecturer at the University of Cape Coast.
It is very, very critical that we take the whole thing holistically, from the input we are getting to our lands, to the production itself, to how we do handle the produce harvests, and then to the consumer. Even if we are doing a whole lot and we are not doing anything about post-harvest handling, we are still going to lose the produce. So it is right from the government down to the consumer, which the government itself is also part of the consumers. So if we sit down and then bring up policies that can really help, in fact, we will not even think about importing any single thing from any other country.
Chief Executive Officer of Kent Investments, Richard Addison, had this to say about developing the value chain.
There's a value chain. The storage should be somebody else's problem. I mean, the farmer can grow it, somebody can store it. Obviously, as a farmer, I don't even need to own a tractor. Somebody else can own the tractor. I can rent the tractor. And somebody will build their warehouses. And like Doc was saying, it's the education, because people need to know that being in agriculture doesn't really mean that you have to go to the field and farm. Even transporting fertilizer from wherever you're getting it to the farm is part of it.
Clearly, targeted efforts will be needed to ensure that the country has enough buffers to avert a future food crisis.
And that's our package for tonight. For more business news, you can log on to myjoyonline.com/business. I am Beverly Broom. Enjoy the rest of our programs.